what a mess it is out there. Everybody's in a bad mood this week. We're dealing with Broadcom screws us over, SPY screws us over, breaking 557 and 550, as Scott told us. This NFP thing is a mess. Next week is CPI, PPI. So, of course, we're bringing in our good friend Scott Redler to let us know what the hell is going on here. Scott, we have the big bloody NVIDIA chip on the screen, as everybody can see. So, Scott, how are you doing today?
I'm fine today, to be honest. I'm still just trying to shake off a little bit of the last few weeks, because the last few weeks have been very, very tricky. Just to the mere fact that things have gone further than even the active bulls would have wanted after the August 5th lows. And then after going a little further after the active bulls would want, we digested for 7-8 days, went out on the highs of the actual year almost, thinking we consolidated. And then on Tuesday, we came in, futures were down, and that upper range was sliced. And here we are today. I want to go over the chart of the SPYs because as upset as I am, I feel not blessed. I just feel happy because you got to find a little happiness that, I followed my process, and that's what's kept me in this business since like 1999, right? What are we, 2024? Been doing this a long time. I've made a lot of money. I have a nice life, and I'm trying to make sure that all of you have a nice life and do this for a long time. But sometimes it's just like, wow, did that really happen? So with that being said, I'm just going to run through it real quickly. I know we like to freeze the frame, so we're going to do a quick pause. I want to run real quickly on, the mind of a trader. So if we go into the mind of a trader, this sequence was easy. This downward sequence felt as if it was calculated. There was no predatory action, from a red dog reversal at the 8th day to a big wide range bearish bar on August 1st to get everyone out of everything. And then all of a sudden, finally, you had like a real low on August 5th. And from there, that's when I put my wife's blood in the street account to work. That's when we bought stuff in my swing account. I was at the highs of my year. Then you had a move to the 8th day. That could have been like a feeble bounce. It turned out to be engulfing. And I know here people got out of some stuff, but right there, everyone switched gears fast enough because it was still in the baby stage of the bounce. And then coming into right around here, I feel is when even, those who thought we can go higher were like, we need to pause here. That's where we broke down from. I know from there is kind of where people stopped trying to be long. That's where I actually started to get a little short, and it just didn't stop. We went all the way back to the highs here, pretty much for no reason, just because the computers were programmed for max pain. And then I remember on this day right here is when I got out of most of my shorts. I wound up losing a lot, but I lost less. So I felt kind of good about it because I followed my rules. And then if you go back to where we were on Friday of last week, it looked like we just consolidated a 9-day range. Finally, 9 days of digesting after a move from the August 5th lows that was fast and furious. It usually says we could go higher because of the potency. Then this day happened. That was Tuesday. So on Tuesday, I came in. I was long like 5 or 6 things. I was like, really? Is that what's going to happen right here? And I got out of everything. Got out of all my longs right here at 556 saying, you know what? I've seen crazier things. I even got short the SPYs. And then from there, we broke the range. And then it's been pretty methodical, though. Now you can't be upset because you came back up. So you were able to re-short into the resistance, right? Because that's what makes sense when support, which was support for 8 days, turns into resistance. At least you can make your moves. And then today you even had a time too. Like the jobs report came out, the market was down 30 handles, was flat. You had levels to measure. Okay, I came in pretty flat. The reason why I'm a little upset is because I have friends that went really, really, really short and made a lot of money today. And although I was out of the way, I should have made more money short. But anyway, here's the moving averages pinching. You had 549. This 547.10, which I posted on Twitter, was very important. Why? In order to get to the 38.2% retracement, what do you have to do? You got to get through a prior low, and that happened. Now this is gone. Goodbye, gap. This was important. We didn't hold the 38.2 retrace. We stopped it for half a second, and now this is the next level. that most are watching. This is your 50% retracement from 510 to 564. This would be pretty interesting if it holds. As of right now, the SPYs are trying to hold. Trying is like, a very loose statement, where it made a low a few minutes ago. Right now, it's 256. It made a low of 539.40. I feel like right now, NVIDIA is kind of stopping the bears from getting another move. Why? Because NVIDIA did not make a new low when the SPYs and the Qs and everything else did. So it's holding some people off for now. So there's NVIDIA at 103. It gave us clues to get out of the way when it was up this morning. Michael, I'm like, guys, watch NVIDIA. It's up $1. And I was actually long. And he goes, if it goes red, you got to get out. If it breaks 104, sellers are going to come out. And that's what it did. Went to 195. And now it's kind of a different little world here. So, you can look at NVIDIA right now. Here's your intraday. It did not make a new low when you go to the SPYs. The SPYs was not as bouncy. So if anything, we'll see how that, it's only 2. But anyway, so with that being said, this break felt a little bit more methodical and a little bit more calculated and a little bit more telegraphed once this was done than what happened here. But again, we're talking about apples and apples, or oranges and oranges, or green bars and red bars. And at this point, we'll see what's next. This upper range broke, and now the active bears have the ball, and they're going to figure out where we go down to. We did not hold the 38.2% retracement. Maybe a good setup would be if we can get there fast into the close, or next Monday into an open. This spot would be a good active spot to perhaps test and trade. Test and trade for now, because we have no idea what's next. Is it September 6th? We have a while till September 18th, which is, the week after. And then we also have some economic data next week.
Okay, Scott. So let's look forward a little bit. As you said, there's economic data next week. We have the CPI, PPI, plus we have Oracle earnings on Monday. Like, what do the bulls want to see here? Like, what needs to happen if things are to get back on track?
Well, what does on track mean, right? There are some people who are really short today, made a friggin' ton of money. So for them, this is on track. For an active bull, this is fine because we broke this area. So if you were long a few things, you want things to go lower because you feel better about yourself getting things out higher. So what could start a new active sequence to then put on some risk and feel more comfortable? Well, you have 510. I would think if we're going to make a higher low, you would think it has to hold this area, and that's Monday, Tuesday-ish maybe. And then you just have a lot of tactical trades. I don't think there's anything that could happen to change the complexion. You had an active bullish sequence up to here. It tried to figure out if it can continue. It ended on this day. Now we're in an active bearish sequence, and the question is, where do we go? Some people ask me today, like, Red Dog, do we have to retest the lows of 510? I'm like, we don't have to do anything. We can make a higher low. We could, hold a retracement. Right now, the market's in market discovery. So, the money to be made was short today. The money to have been made or saved was out of the way here. I lost money on this day, but if I would have closed my eyes, went underwater, I would have lost a hell of a lot more. So it all depends on where you stand. For me, I'm in a lot of cash actively. I talk about my 7 accounts. I have an active account, a swing account, an option account, a box account, and all those things are basically in cash. They've been in cash since this break. I also have a 401k where I'm 51 and change. I'll be 52 September 21st. Every single month, I'm putting my money in and maxing it out because I don't care what happens. 403b, which is my wife's account also, where she's in private practice every month, and then the Blood in the Street account. So if you go here, to the S&P cash, that for those of you that follow the Blood in the Street account, some people asked me if I was going to do it today. I actually thought of it a little bit, but I'm like, I got to stick to my guns and use my method where we have to be at least 5% off the highs. So if you have a cash account like I do, that you're trying to kind of dissect money out of the market, which we've done 17 for 17 times. This year we did it twice, right? We did it once here, 49.53. The oscillator was minus 80 here. And then if you remember, I got out there, made 5% for my wife's account, went back into a fixed rider. Then here, I At the end of August 5th, I went long it again at 51.86 and then sold it on this day, August 15th at 55.84. I took another 5% out of the account for her. It's been in a fixed rider. Now it's in full cash. So some people are like, where would you target in order to put that account back to work? Well, right now the oscillator is minus 45. So that means if you have not been short, it's hard to be short now, or you shouldn't be pressing for over the weekend because you kind of missed it. This was your spot to get short. This was your spot to get short today. Now you're enjoying and figuring out where to cover. I would think, here's your 100-day, and this is also this is probably a 50% retracement. If I wanted to be really aggressive, I could probably, if we get some kind of trade on the lows next week into this area, we'd probably be about 4 to 5% off highs. Maybe I would do a smaller tier one. Here I did a bigger tier one because this one was 5% off the highs. I did a normal tier one. This I waited till we were almost 9% off the highs. So I was like, wow, let me do a bigger one because I didn't get sucked in earlier. So if I get sucked in here, I will probably do a small tier one because I know that, hey, maybe we want to see the 200-day, maybe we want to retest. So that's what that accounts for. But as far as a trade, I'm being tactical. If we open down, maybe we buy them on Monday. If we open up, maybe you short them. Although if there's not a great setup, sit on your hands because the last thing you want to do is lose money. And, there's been a lot of ways to lose money the past 3 weeks versus not. Even up here, this was really tough. This range up here was really hard. Looked like you were going to break down. Bears were screaming, and then we engulfed it. Here looked like we were going to break down, and then we were right back to highs. Here we looked like we were going to break out, and then that happened. These algos are getting good. So you got to make sure it's a good setup and know what you can handle.
Okay. All right, so, Scott, so we're 4% off the highs, but there's a lot of people acting like the world just came to an end. We're seeing this across a lot of our communities. It feels like stress levels are very, very high out there. I don't know if it's just active traders are more sensitive because they're more they're speculating more day to day, but why do you think people seem so frazzled?
I think because we probably shouldn't have gone back to the highs. I know I'm an active bull. I like to be bullish. I like to have a lot of positions on. And when we got back to like 545 in the SPYs, I was like, wow, I just did a friggin' great job. I got out of the way, made good money. I caught the bottom, made good money. I made great money in my Blood in the Street account. I waited from 535 to 545-ish. Now we probably could short here. And I wound up shorting it all the way up, broke a few rules. And then I had a cover. And then we held there for 8-9 days. So if you covered your short, you're like, okay, now let's go long. And if you got long, then we go lower. So you lost both ways. And I think that's what more frazzled. That's why traders are frazzled versus the action. Just if you go back to the SPYs, if the SPYs would have stopped here, if Woody would have went to the place, which didn't, and then if we went back to 528, then it would have been a lot easier to get back to highs instead of just going right to highs, digesting, and then rolling down. It was hard action. And I talked to a lot of very sophisticated traders, or a lot of even traders have been doing this for 30 years. And, the last 2-3 weeks have not been easy. It's been pretty predatory. But this week, at least, it made some sense where follow the rules. You had your break, you had a feeble bounce, and then you had your rollover. So, there you have it. It wasn't like, even today, they didn't trap you. Today, if you had some longs thinking that maybe we bounce on the, or if you wanted to get short, they didn't open us down 50 handles. They opened us flat. You could have got short right here at 547 and made good money. So, the last 3-4 days were a lot easier, in my humble opinion, a lot more calculated and played by the rules versus the week or so prior that was a trap. Like this was a full-fledged bull trap. This, turned into, an active bearish sequence. And now we'll see. So next week, if we open up on Monday or Tuesday, do they reject 547 and do we roll down, or do they reject? Well, we don't know where we're going to close because it's 305. So traders just want the market to play by a set of rules that we've put together, what I call the good book, for 30 years, not misdirection, type of stuff. Look at Tesla. Like, this was friggin' dirty as hell. Like, Tesla looked good. Tesla finally had a nice bullish move, gave you some follow through. This morning it was above 235, and then all of a sudden went red. So if you thought, hey, it was 2 strong days, you could buy some, it turned into a candle that just took back these 2 days. Like that is a tough, dirty move. There's been a bunch of those out there, and that's not easy to deal with as a trader.
Okay. All right. Scott, so we really screwed up something over the last week. We really blew it. So it was Itz's birthday on September 4th.
Oh, that's my wife's
Nobody
birthday.
told us, but this was
Happy
a big
birthday.
wow. Unless Itz is your wife undercover,
It could be. Is Selena watching
spying
this?
on everything.
She's she's pretty attentive, but not as attentive as It's knows everything that we do whenever we do it, and hopefully he's doing really well. So that's pretty cool. Congratulations, happy birthday.
Okay, happy birthday to our good
Happy
friend
birthday,
Itz, who is the
Cheers. I'm
number
drinking
one
water,
person,
by the way.
of course, and our current number 2 Tony is in the crowd too. Okay, so Scott, so Fed is obviously a big topic today. The hourly earnings number came in hot. Now people are back to all the armchair economists out there are back to like a quarter point cut in September. What do you think about the Fed here?
Well, I think that it's a little bit easier now. About a week ago when the S&P was at 1% off the highs, the expectations were still for 100 basis points worth of cuts. I'm like, if we're sitting here 1% off at all-time highs, ready to make all-time highs, how the hell are they going to cut anything? And now we're 4% off the highs and sentiment's still negative. It feels like, there's a chance that there's going to be more than a quarter rate, cut on the 18th. It could be a little bit more, or at least they could do a few more. So we'll see. To me, it's bad news was good news, and then good news was good news, and good news was bad news, and it's still tough to figure out. Right now, it feels like growth is slowing a little bit. Okay, I don't think we're heading for a crazy hard landing recession. I think this is what the Fed wanted, and again, we're normalizing. The S&P is still up like 14% on the year. The historical average for the S&P is like 7.7% over 100 years. We're double that, and everyone's upset or mad or begging for rate cuts. That's a weird environment. It's been a weird environment for a year or two already between, the economists and the stock market and the Fed. The people have been calling for a recession for 2 years, and the market has had a big move. So it's hard to be crazy bullish, and all you do is hear about recession talk, over your shoulder with the TV. That's why I keep the TV off. So at this point, it feels like the market's doing the job for the Fed. The rates have come in, the TLTs are going up, bonds are doing well. But now the question is, how do we react? And we don't need to know until September 18th. Right now, it's September 6th. The SPYs are 4% off the highs. If we're 3-4% lower from here, which I'm not saying we will be, but if we are, then they cut and it's easier to go up. If we're, up near, we bounce back or near upper level areas, then it could be like, hey, they're going to sell the first rate cut. So at this point, I think it's just a conversation point. We'll see what happens, during every phase of this sequence. And as of now, the upper range was broke. We're retracing. We now have a low from today, and we'll see how next week goes, with more economic data happening. But again, they're going to have to cut rates, and now that the market's lower, it makes it a little easier for them.
Okay, but do you think the reaction today kind of ups the ante for CPI? Because it definitely seems like people's nerves are pretty sensitive. Do you think there's do you think we're going to see a big? I mean, you don't even have to spell out direction, but do you think we're going to move big on the CPI?
Well, let's see where we are. CPI is Wednesday. Today's Friday. Do we get more downside follow through? Do we bounce back? It all depends. Like if we're down here come Wednesday for the CPI, chances are it's a good oversold setup to be long into. If we bounce back to 547 or bounce back a little bit into this area, chances are the setup's going to be a little bit more difficult. Chances are the CPR is lighter. We are, the inflation's coming in. We all know the Fed's going to cut. If it's really light, maybe they'll say, oh, they could do a quarter now. But then if it's really light, they'll say it's a growth scare. So again, I'm not thinking about the CPI until Tuesday, depending where the market is. Are we going to be more of a sold? Right now, we're minus 40 in the oscillator. If we're like minus 80, it's going to be all about the setup next week. It's not about the macro. It's more about where we are when the data hits. We were still pretty damn elevated today with the jobs report. That's why it was easy for them to sell it down. If we're down, near 536, or somewhere in here, then, at the 50% retracement of this move, then if we do get a light CPI, maybe there'll be a nice tradable bounce. But if we rally Monday, Tuesday into the CPI, chances are, it's a tougher setup. So again, let's see where we are come Tuesday into Wednesday CPI that happens at 8:30.
Okay. So I was having an interesting conversation with our friend JR from the Momentum Express VTF a couple of weeks ago. He told me that I should stop asking him about IWM because it feels like everybody is constantly waiting for the small caps to wake up. And it's funny. He's like, you need to stop asking me that question. Like, I mean, do you think people are getting too distracted by all these things? Because it's like everybody's waiting for whatever random thing it is to break, maybe Bitcoin to come back, for IWM to come back. Like, should people be concentrating, I guess, on fewer names now?
Well, people concentrate on sectors that they like, and then I just think that they have to take up TV time. The small caps. Every now and then there's a great setup in the small caps. But then I think after the last rally that we've had up, people are less interested in the small caps because they don't trade well. Some groups just don't trade well. There was a great trade on that last CPI. If you go here, okay, and gave you a big move into that red dog reversal, so you had it was a great trade too because you had this channel here that everyone was looking at. So there was a nice setup to break above it and get some follow through. Then there was a great short setup right here when we broke post whatever that Fed was. And then this bounce wasn't great. You had another little wedge. We broke to the downside. It's just choppy. You could look at it. It's got to be perfect to trade. Small caps. I don't even think people can name 10 different names that are in the IWM. They just can't. The IWM and the small caps. So let's just trade the IWM or the TNX. The Qs are different. What's weighted, where the leading indicators are, what's happening, what to look at. The small caps are just like, it's just a vehicle every now and then. And as of right now, it gave you some cute clues, just like the Qs and the SMHs. It made a lower high and broke prior to the market. And now, we'll have a new point of reference. And depending on where we are next week, hey, if you open lower Monday, Tuesday, hey, maybe this is set up to go red to green. If we open higher, maybe it's a short here at 210. But it's not, it's not a focus point. And people like, Red Dog, why did you get so mad at Tom Lee? Tom Lee's an active bull. He's been bullish for years. Granted, I like bulls because chances are over time the bull market wins. I just thought he was a little nutty. When we were up here and we had that failure, he came out and talked about a 50% move in August. Higher from here. I'm like, we just failed. And he stuck to that. And then if you go back to the SPYs, when we rallied back up, to here-ish, I remember, I think that's when he came out and said we're going to make new highs in September, 5,800. And that's what kind of squeezed me out. I'm like, I guess it could happen. And I'm like, I can't fight this. And then he came out this week. He's like, we could be 7-8% lower. After he cheerleaded the IWM after a big move. And after the S&P went from 510 to here, he should have right here said, hey, I wouldn't be paying up. We just rallied back. We're coming into a seasonally weak time. I would reduce for what could be a pullback for a better opportunity. Not, cheerleading the market here for an extra move. So anyway, with that being said, I think the small caps, the broadening, it's just like I'm not leaving. The Mag 7 names are broken. They're bent. They're good indicators. I'm not leaving NVIDIA because it also was a good indicator. So there are names that still lead the market action and provide opportunities. I'm not just switching gears. But when there are setups in the small caps or in the bios or in the home builders or in the energy names, I'll go there. But they have to be perfect. Other than that, the bread and butter is made with tech, the banks, the SPYs, the Qs, and the SMHs for now.
Okay, well, why don't we go to the banks? Because the banks sort of sneaked up on everybody, and XLF is one of the top sector ETFs this year. And nobody's really talked about this. But what do you think of this whole setup here?
I didn't really play it, so I don't really deserve to talk about it. I watched it. It made a new high. It's coming back. The XLF is coming back into here. So if this is any good, maybe next week you could buy the XLF. It hit a high of 45.87. JP Morgan's had a big move. I know Mike Chillo trades it all the time on the Alpha team. I don't trade it as much. And now, it broke the 8-day. It's coming into the 21-day in the prior breakout area. So you want to see this hold 44.09. But it was good. It was good. I just, again, how much real estate do you have on your trading platform? And I just wasn't switching over to JP Morgan, Morgan Stanley. So JP Morgan was great. Goldman was good. Everything else was kind of a laggard also there. So, but here, it made a new high. So this is a leadership group, and now see, does it retest this area and hold? If it doesn't and goes below it, then that would be pretty predatory and probably mean we're going lower.
Okay, so we're gonna wrap up in a little bit, but guys, before we go, if you want to join in on the fun next week, and next week is pretty much guaranteed to be wild times, you can go to t3live.com/show, t3live.com/show, and you can get 5 days in Scott's trading room, so you can see what he's doing in real time. So that's the CPI report, PPI, Oracle earnings, all the other fireworks next week, which of course is in front of the Fed the week after. So if you want to have some fun with Scott, t3live.com/show, t3live.com/show. Old School Soldier says looking forward to next week with the Alpha Team. Awesome. Can't wait to see you there again. t3live.com/show. So Scott,
Can I say something on that?
Of course.
Yeah, actually next week's a good week to do it, because sometimes, people come into the virtual trading floor when we're in like some crazy bullish trend and I have 20 positions on. You're like, it's so hard to follow. When did you get into it? Or what tier are you in? And this and that. Like right now, on Tuesday, I went to tactical. So that means I don't have a lot of positions on. That means I'm going to look to trade some long and some short, sit in cash, wait for good setup. So you'll see the trading aspect of it versus, a different time when it's harder to follow. So next week we're coming in tactical. I'm going to try and make money every day. So you'll see things come on the virtual trading floor, leave the virtual trading floor, depending on the setup, the futures, the situation. So you'll really learn a lot. I'm hoping to make some money next week. So if I can make money next week, chances are you're going to make some money next week. Versus if we're in a trend that's up and I'm in 15 positions and I'm just using my tier system and trading around it, it's a little harder to follow. So next week, to me, would be a great week for you guys to come in the virtual trading floor and test levels and make some cash flow, because I kind of lose to the fact that I've been doing this for 30 years. So I carry positions. I treat my 4 accounts like a portfolio manager, like I'm a portfolio manager where I use options, trying to maximize my buying power, this and that. Now, when we break day in 21 day, I'm in day trading mode, trying to just make a few thousand a day or more, depending on the setup. So some of you have been trading for a year or two. You're like, hey, I don't take overnights. I don't take options. I don't have all these accounts. I'm just trying to make a few $100s a day, to pay my bills. I'm like, well, okay, that's why we use a tier system, because I don't talk share size. So if I'm going to try and make some money every day, chances are you'll be able to make some money every day and see what the process is like when the trade presents itself.
Awesome. Perfect. I think I couldn't have said it better myself. Again, guys, if you want to join in on the fun or the craziness, it might not be fun. It's going to be exciting. We can't guarantee it'll be fun. t3live.com/show. So Scott, as we wrap up, do you have any final words of wisdom for the guy out there that's just having a really hard time and, wants to put his head through the monitor right now?
I would just clear the slate, get small, and stop bleeding. If you stop the bleeding, you could get an outside eyes looking in. Get out of your positions if you're in bad positions and you need new stops, and you think the position owes you, or you're hoping and praying, and just get out. So this way you could approach the day the right way with a clear head, make some money, feel good. Then you make some money again, you feel better. And then all of a sudden, a great setup happens. You get back to the size you were using and you make a bigger day. And then you turn around like, wow, I just made 3 days worth of trading. I just cut into whatever I was down, and you make progress. If you feel trapped and you're in bad positions and you're being controlled by the market versus you controlling your process, it's a bad situation for your head and for your P&L. So if you're in a rut or down money and you're trapped, just clean your slate and approach the day the right way with a process, a plan, make the right trades, and then you'll get back on track. You'll feel good. You'll get mentally strong, and you'll start making more money, and then you'll turn around like, wow, I'm back at my high water mark or back at my highs of the year, and then you'll be ready to get a paycheck. But if you're trapped, you're going to be emotional. You're not going to make the right decisions. You're going to have FOMO. You're going to add at the wrong time, sell at the wrong times, and not be able to execute rationally or with confidence. So get small and make small steps that'll get you to firmer ground.
Awesome. Okay, our friend Joshua Hendrick is saying Scott is the GOAT. Tony says, clean slate, great advice. Tony also says, this week I have a few tiers. Oh, this is Scott, I think we have the new tier system, TEAR.
There's no tiers TEAR system in trading. There's no crying in trading. There's a tier system, but not a tiers system. And so if you find yourself crying, wipe those tears, clean the slate, and do something to make you happy over the weekend, and come in, with a glass half full and be ready to roll.
Yeah, traders, at least from what I've seen, traders don't cry; they break things. So if you want to cry,
that's true.
Go and break something. Go to the Salvation Army.
Whatever you do, don't kick the dog. If you kick the dog, I'm coming after you. The dog didn't do anything.
Yeah, and don't
like your home dog, not me. You try and kick this dog, whichever, then it's a different story. Just don't kick your dog at home. He's your best friend. Go out, take him for a walk or a jog.
Okay, all right, that's gonna wrap us up. Scott, don't close out. We got to talk a second after we go offline. Okay, everybody, again, t3live.com/show, t3live.com/show. You can click the link right in the tweet or the video description on YouTube. Everybody it's been a crappy week, so I hope you have an amazing weekend. Bye, everybody.